Good morning, this is Tim McGowan for the Finance News Network. US equities closed lower and very quiet Friday trading, ending just off their worst levels. Major indexes finished lower on the week as the S&P 500 snapped a 4-week winning streak. In Australia this week, investors will focus on the June 30 earnings reporting season, which hits its busiest week with around 100 major companies due to report, covering around 25% of the benchmark's market cap. These companies include Lendlease, Ansell, Boral, Coles, Nine, Tabcorp, Qantas and Whitehaven Coal, to name a few. On Friday, stocks tumbled as Wall Street's summer rally faltered and rate hike fears resurfaced, leading the major averages to end the week on a sour note. The S&P 500 slid 1.3%, the Dow fell 0.86% and the Nasdaq dropped 2%. Friday's halt in Wall Street's summer rally came as minutes from the Fed Reserve's July meeting indicated that the central bank would likely continue hiking rates in the near term, putting a dampener on investors' hope of a slowdown. Meanwhile, China's internal troubles with COVID and problems in their property market may have an upside, with lower demand for imported metals, energy, food and capital goods, alleviating inflationary pressures in the rest of the world. For the first time in decades, the country's enormous trade surplus is a boom for workers elsewhere. Elsewhere on the data front, UK retail sales unexpectedly improved in July, though UK consumer confidence fell to its lowest levels since records started in 1974. No wonder the fall in consumer confidence as UK gas prices rose nearly 96% in the year to July, while electricity prices are up 54%. Against this, real wages in the UK fell by an annual 3% in the second quarter of 2022, the sharpest decline on record, as wage increases failed to keep pace with the surging cost of living. Annual consumer price inflation for gas and electricity in the UK is forecast to soar to an average of around 80% this year, with the cost of gas for both businesses and consumers only expected to increase during the colder winter months. Across the sectors in the US, the market was in defensive mode as consumer discretionary fell against healthcare, energy and utility sectors. On the currency front, the US dollar extended its big weekly gains on the major crosses. The dollar index was up 2% over the week. One Australian dollar weakened compared to the US dollar on Friday, buying 68.76 US cents. On the commodity front, iron ore futures are pointing to a 1.2% gain. Gold prices slipped for a fifth consecutive session on Friday in its longest losing run since November last year, as the bullion's appeal waned with a stronger US dollar and more interest rate hikes on the horizon. Silver was down over 2%, copper was up almost 1%. The potential supply-demand gap in copper is expected to place unprecedented strain on supply chains as the energy transition intensifies. S&P mentioned this week that unless massive new supply comes online in a timely manner, the goal of net zero emissions by 2050 will be short-circuited and remain out of reach. According to S&P, copper demand is projected to grow from 25 million tonnes today to around 50 million tonnes by 2035. Overnight, Bitcoin futures were down 8.7% and fell back to the $22,000 level to more than a 3-week low. On Australia today, the SPI futures are pointing to a 0.4% fall. This is Tim McGowan for Finance News Network. Have a good day.